The UK has just lifted its ban on crypto exchange traded notes, a move that many have hailed as a milestone for mainstream crypto adoption. But within days, Britain's biggest investment platform, Hargreaves Lansdown, has dropped a bombshell warning. They are telling investors that Bitcoin is not an asset class. So what's going on here? Why is the UK opening the doors to crypto while its largest financial platforms are urging people not to step through them? This is Enter Crypto, and today we're breaking down what this warning really means for investors, for the UK's crypto future, and for Bitcoin itself. On October the 8th, the Financial Conduct Authority officially lifted the ban on retail access to crypto exchange traded notes, or crypto ETNs. Now, for years, UK retail investors could not legally buy these products. Only institutions could. But now that's changed. These ETNs are debt instruments linked to crypto assets like Bitcoin or Ethereum, traded through regulated exchanges. So in short, it's a new, safer way for everyday investors to gain exposure to crypto without directly holding tokens. And the government says it's about supporting innovation and competitiveness in the UK's crypto industry. And that all sounds very promising. But then comes this warning. Because Hargreaves Lansdown, who has over 1.8 million clients and £134 billion in assets, is basically the name in UK investing, and they've made their position crystal clear. In a statement, they said that HL Investments' view is that Bitcoin is not an asset class. They said that we do not think that cryptocurrency has characteristics that mean it should be included in portfolios for growth or income. And they didn't stop there. They even added that performance assumptions are not possible to analyse for crypto, and unlike other alternative asset classes, it has no intrinsic value. Well, that's a brutal assessment, and essentially they're saying that crypto isn't reliable, that it can't be valued, and that it shouldn't be used to meet financial goals. Now, for a platform that helped millions of Brits invest in traditional assets like stocks, bonds, and ETFs, this is a major shot across the bow for the crypto industry. And this is where things get interesting, because the UK government is trying to position itself as a crypto hub, rolling out regulations, sandbox initiatives, and even considering digital pound pilots. Just this week, they confirmed that crypto ETNs will be eligible for stocks and shares ISAs, meaning that Brits can now hold crypto-linked investments tax-free up to 20k a year. So on one hand, the government is inviting retail investors into the market, and then on the other, the biggest retail platform in the country is saying stay out. And as you can imagine, that's a pretty confusing message. So is the UK trying to promote innovation or protect investors from it? Now, Hargreaves isn't wrong about one thing, and that is that crypto is volatile. Back in 2022, during the so-called crypto winter, investors lost an estimated $2 trillion across the market. Bitcoin fell below 16k, wiping out years of gains. But for early adopters, the story's been very different. As of now, Bitcoin's trading around 120k, delivering historic returns for those who held on. So is Bitcoin's volatility a reason to avoid it, or exactly why it deserves a spot in a diversified portfolio? That is the ongoing debate. And for retail investors in the UK, the landscape is changing fast. Crypto ETNs now provide a regulated gateway into the digital asset space, one that just simply didn't exist before. But warnings like this from Hargreaves Lansdown show that mainstream finance still doesn't fully trust crypto. It's seen as speculative, unpredictable, and difficult to analyse through traditional financial models. Still, the fact that crypto ETNs are now back on the table and eligible for ISAs signals one thing clearly, and that is that crypto is no longer being ignored. So is Bitcoin truly not an asset class? Or is this just legacy finance trying to defend its territory as crypto moves into the mainstream? Let me know what you think. Is Hargreaves Lansdown right to warn investors? Or are they missing the point about Bitcoin's long-term potential? Don't forget to subscribe, hit like, and turn on notifications, because the rules of money are changing faster than ever. Thanks for watching, guys. Thanks for listening, and I'll see you in the next one.